Hi guys, it's your guy here, the unknown trader, okay? And today I want us to look at something very important. Guys, please don't watch this and forget, okay? Please don't watch this and forget, okay? This is important, okay? So, I want you to ask yourself a question and be honest when answering it, okay? What does trading mean to you, okay? What does it mean to you? Are you here for the long term, or are you here just to test the water, see how it works? You are actually trying to see if this will work for you or if it doesn't. I know most of the time, mostly people who have a passion of being entrepreneurs, they like trying different things, okay? They like or they love testing waters. Does this work? Okay, if it doesn't, they jump to something else, okay? So ask yourself, what does trading mean to you? Is it a business? Are you in it because you love it? Are you in it because you see something big in it? Do you think you can grow in it, or you are just here to test, and if it fails, it's fine, you're gonna move to something else? Be honest with yourself. Okay, is it something like gamble? You want to treat it like lotto, for instance. Sometimes you can win, sometimes you can lose. Is it a gamble to you? Okay, is it a hobby, something you just want to do when you are free, or something just like that? Okay, what does trading mean to you? Okay, if you can answer this question correctly, then everything will start making sense for you. Why am I saying this? Because these are the people you're going to be trading against, okay? Already we know there is a statistics that says 90% of retail guys are losing. Only 10% are winning. And for somebody to win, it means somebody has to lose, okay? We know that, okay? So these guys are highly profitable. Every year they make a lot, okay? Because they are highly profitable, okay? These guys breathe the markets, okay? They know the markets. They are well resourced. They use the best systems in the world, okay? They have psychologists. They get counseling whenever they need it, okay? So they are well trained psychologically, and they are well trained technically, and they are also well trained fundamentally, okay? So they are I don't know how to describe them, but they are the best in the world, okay? They are the best in the world. And these are the guys you go against each and every day when you are going to your charts. And for one to win, one has to lose. This is just a wake-up call, okay? A wake-up call, because most people think this is something easy. It's not easy. It's really, really not as it looks, okay? To be the best, you must invest time into it, okay? Grow every day, okay? Because these are the guys. These guys are not playing, okay? These guys are not playing. They're actually getting paid high bonuses if they reach the goals that have been set for them, okay? And every year they make a lot of returns. So these guys are consistent, okay? Okay, I want you to know the truth, okay? These people here, or the people you see here, have their playbook where they have their A+ setups, okay? And they focus on those setups, okay? Most of these people have more than 30 years experience, 20 years experience, 15 years experience, okay? And you have started yesterday, and you see Instagram marketers and everything looks so easy. They can come, do it for 15 minutes, then go to the beach, okay? Sell signals and all sort of stuff. Guys, you are against the best in the world, okay? This is just a portion of them. There are many trading floors in the world, okay? There are many huge pro firms. There are hedge funds. There are big banks, okay? You are against the best, as you can see. So it is only fair to treat this as a business, okay? The thing that I want everybody to understand is that this is no game, okay? So it is important to have a trading plan, okay? It is important. If you don't have one, then you are like somebody who's guessing every day. Every morning you wake up to guess, and it doesn't work like that, okay? It doesn't work like that. I will explain in a moment why, okay? And after you have drafted your plan, I think I have one video where I gave you a plan for free. You just fill in the gaps and we went through it together on how to fill it. Okay, just go and search. Actually, I'll put it in the playlist called Start Here, okay, because that's important. And then after that, okay, you must identify the setups that work for you. Only the ones that you understand more than the others, only the ones that make sense to you, the ones that you are really good at, okay, and work on them, okay. Improve on those setups. Once you have improved on those setups, you understand them. Every time they appear, you see them, you know how they should look, okay, for a good opportunity to be presented. Then you put them in your playbook. You create your own playbook. I repeat, you create your own playbook, okay, and you put those setups in your playbook, okay. You only take your A+ setups, okay. It doesn't matter. I'll show you my my best setups, okay, or my A+ setups, okay, in a moment. It doesn't matter. Only use the setups that you understand more than everything, okay, because this is supposed to be something that is simple. Once you have setups that you understand, you'll be able to actually take them every day as an algorithm, okay. One thing an algorithm does perfectly is it follows instructions, okay. If it has been programmed to take a setup that looks like this, every time this is met and this happens, it will execute those setups as they are every day. It doesn't matter if it loses or if it wins. Its job, it's actually to execute what it has been programmed to execute, okay. So to be a good trader, actually everyone must reach a level where they are able to take their setups as an algorithm. It doesn't matter if it's a win or a loss, okay. Those things mean nothing, and we'll go deeper into that in a moment, okay. You must be able to take them as an algorithm, and you won't be able to take them as an algorithm unless they are your A+ setups and you understand them more than any other setup. So it doesn't matter what kind of strategy you are using, as long as you understand that setup and it has been delivering, okay, then you put it in your playbook, okay. Every day you take this one. You should have pictures of where it has set up the best way and pictures of where it has been invalidated. You need to know when it is invalidated, okay. That is important. And then you follow the rules on your playbook strictly. Why? Because the goal is to become an algorithm, okay. Okay, sorry, I'm typing with my mouse. Don't mind my typing. But the most important thing is to reach a level where everything is executed as an algorithm. It doesn't matter it's a win or a loss, and we will get to that in a moment. Remember, we spoke about things like okay, I'll talk about that in a minute, okay. And then every day you should read or follow interviews, watch channels that will improve you, okay. The goal is to grow every day. Preferably I read books, okay. I love listening to interviews from best people, Paul Tudor Jones. There are many actually good traders, people like George Soros, people like Peter Branded, people like Mike Belafort, people like there are many guys. There are many people who have been in the industry for decades, and they have performed very well, okay. So I love listening to interviews and reading books, okay. There are books like Market Wizards, where actually you'll get interviews with the best players in the world, okay, and it's important to actually learn from them, okay. So this is important to have all these things, okay, all these things. Why? Because it's highly important to be at your best A game, because these guys are not playing, okay. these guys are not playing. They're actually the best in the world. So now let's proceed. Okay, let's proceed. And I always say this, okay, I say this in almost every video that I post. The most important thing is not wins, okay, crucial, or losses, okay. These things are not important, okay, not important. I see people posting screenshots of wins. Hey, I don't lose, I've been winning. That's not important, okay. That is not important, okay. That is not important, and I'll tell you why it's not important. I was actually reading the Market Wizards, and there was an interview with this guy called it's called Bill Lipschutz or something like that, okay. Bill Lipschutz, yes, I think it's Bill Lipschutz, yes, okay. And he was talking about how he grew his account. I think he said his grandfather actually left him an account, and he grew it, okay. He grew it to actually, I think it was something like $12,000, and he grew it to something like $250, okay. And he blew it in 1 week, okay, in 1 week. If you follow people like who is this guy, is it Jesse Livermore? If you follow Jesse Livermore, one thing you'll learn about him is that he actually made $100 million, okay, $100 million, and lost all of it, okay. So wins and losses means nothing. Honestly, they mean nothing, okay. Why? Because it doesn't matter. You can make say $1,000 in a day, or you can build it consistently over time. Say maybe it might take you, if you're starting from the bottom, say maybe it might take you a month to make $1,000. I'm just giving an example, okay. And you can lose it in a day. Actually, you can lose it in a day. So it doesn't matter. There are people who made millions of dollars, okay, and lost them within a week, or just in one trade. It doesn't even have to be 2 trades. You can lose it all in 1 trade. So honestly, wins and losses actually mean nothing, okay. Why do they mean nothing? And this is the truth, okay. I know that this kind of things are less spoken about, okay. Nobody wants to talk about these things, okay, because people want you to buy courses, they want you to buy signals, okay, and those things don't work, okay. We'll talk about that in a moment. Okay, fine. I'm not saying courses don't work. No, okay. Don't quote me on that, okay. I'm not against courses, and I'm not against those who sell signals, but the goal here is to grow. Because let me tell you something, the most important thing is experience. And you cannot buy experience, okay. Nobody can buy experience, okay. Now let's proceed with this. Wins and losses mean nothing. The only thing that matters is your risk reward and your win rate, okay. Win rate, okay. And one thing I've learned is that see these people that I've just showed you, these people have a consistent win rate, okay. It's not even most of them have a win rate of less than 60%. Some of them have a win rate of 40, okay. And honestly, big pro firms or hedge funds don't even care if you lose or you win, as long as you stick to your win rate, as long as you stick to your setup that gives a certain percentage of win rate, and you use a consistent risk reward ratio. They are fine with it. They don't care how much you're gonna lose, they don't care how much you're gonna win, okay. They care about the process, because the most important thing is the process, okay. Now say maybe you have a win rate of 1:5, which is practical, okay, meaning you risk $1 to make $5, okay. This simply means Okay, let's proceed. And say for instance you have a win rate of 40%. Okay, you don't have to have a big win rate to be profitable. No, Peter Branded is the best with a win rate of 30%. Okay, this simply means out of 100 executed positions, you actually gonna win 40 of them and lose how many? 60 of them. These are the losses, these are the wins. Now when we bring the risk reward ratio in, this means here you lost, you're risking $1 and you, okay, fine, sorry, I made a mistake. The eraser is not okay. Fine, let's just say here these are your wins. So this means now you won 40 multiplied by $5. Okay, 40 by 5. Okay, out of 100, and you actually lost $1 by $60 trades. As you can see, you are highly profitable, highly profitable. We are not taking spreads into considerations because every time you execute there will be spreads, okay, which will roughly interfere with your win rate, okay, but we are not including that right now. Okay, so this is how you should approach trading. The most important thing is win rate and risk reward ratio. So one thing we strive for is to have a strategy that gives a certain percentage of win rate and use a certain percentage of risk reward ratio. Okay, so when you have your A plus setups, okay, it doesn't matter honestly if it's one setup. Remember, we have a lot of pairs, okay, depending on the markets you are actually trading. There's a lot of pairs, okay. Even if you have only one setup, it's okay as long as you understand the setup in and out and it has proved to deliver. Okay, even if this setup has a win rate of roughly 30%, okay, 30%, with a risk reward of 1:5. Remember, there are people who have a risk reward of 1:10, okay, 1:10, depending on the type of trader you are. Are you a short term, are you a long term? Because honestly, most of the time if it's 1:10, you won't get it every day. But if you're a long-term guy, you can get this most of the time. Some people actually have 1:50, depending on the type of trader they are. Remember, we have swing guys, we have intraday guys, and we have long-term guys. Long-term guys can take big risk-reward ratio. Hence, we have Peter Branded, who has a win rate of 30. Okay, and one thing these people will tell you is that they actually allow their wins to run. Okay, their wins to run. Your win rate, if you are risking 1/5, 1 to make 5, this means you are cutting losses immediately. Okay, this is cutting losses immediately. When there's a loss, you are cutting it. Why? Because it's only 1:5. Okay, so this is the most important thing. Build a playbook with only your A plus setups. There are thousands of setups in this world and they work. Unfortunately, here's what happens. Okay, most of the time you find that, okay, a person has a good system. It's a good system, okay, and that system actually delivers maybe a win rate of 80%. Honestly, there are people with win rates of 80%, but the problem comes in when they actually, okay, let me explain this in a moment. There is a random distribution between wins and losses. What does this mean, random distribution? This means, yes, you have a win rate of 80, which we know will give you 80 wins and 20 losses. Okay, 20 losses. Okay, which these guys have superiors. and their superiors know the performance of each and every person under them. Okay, so what they do with like prop firms, okay, is that if your win rate like starts declining, what they are gonna do is they are actually gonna get you a psychologist, okay, because they know that, okay, the only thing that can interfere with your win rate actually is emotions. Say maybe something bad happened to your family. Say maybe you are not feeling well. Say maybe like things like psychological issues, okay, they are the only things that can interfere with a win rate. Okay, why? Because easy, you have a playbook. Okay, you have a playbook. Okay, and when you have a playbook, you execute everything like an algorithm. Okay, which most of these guys over here have mastered. These guys are executing the same thing day in, day out. Win or loss, they don't care. Okay, and their companies don't actually care. Okay, if you follow Bill Lipschutz, you will know that he actually explained that in a company where he was working for, they didn't care about the wins. They didn't care how much you win, how much you lose. Okay, it's all about the process. Okay, it's all about the process. It's all about the process. You are now like an algorithm with your A plus setups. They are in your playbook. You have learned to execute them. Only your A setups. So the only thing that will interfere with your win rate is emotional issues. Okay, so those guys, once their win rate declines, they actually go through psychologists who help them regain like stability in terms of emotions. Okay, so that's something that is important. Okay, so yes, once you have identified your system, it's in your playbook, and you execute the same thing over and over again, and it gives a win rate of 80%, that means over every 100 trades you're gonna take, you're gonna win 80 and lose 20. And now the most important thing is the risk reward. Okay, the risk reward. So yes, there are many people who have a win rate of 80%. The problem is that there is random distribution between wins and losses. Okay, there is random distribution between win and losses. This means you don't know which trade is gonna be a win or which one is gonna be a loss. Say for instance, today you are going to your screen, okay, and you're gonna open, say maybe your setup is presented and all the confluences are there. In other words, I mean all your criteria are met, okay, as described in your playbook. And these are the criteria you take every day. You have been doing this for a long time or whatsoever. Okay, when they are presented, it doesn't mean that just because you have a high win rate and your system is good and you are taking your A plus setups and everything has been presented as it should, okay, it doesn't mean it's gonna be a win. That's one thing professionals understand. Okay, random distribution simply means you don't know which one is gonna be a win and a loss. That is why becoming an algorithm is important. Why? Because you don't know. All you know is you're gonna win 80. Okay, that's all you know. All you know is that you're gonna win 80 trades out of 100. As of which one is gonna be a loss, you don't know. Okay, hence you take the same thing day in, day out. If it's a loss, fine, move on. If it's a win, fine, don't get overexcited. It's part of the process, it's part of the plan, it's part of the playbook. Okay, don't get too excited, you move on. Okay, and the reason I told you that people like Jesse made 100 million and lost it, people like Bill Lipschutz made a lot and lost it all, there are many people actually who actually made a lot and lost it in 1 week or 1 day or 1 month. Okay, why? Because of random distribution. You know you're winning 80 out of 20. So what happens is most people, will like, for instance, out of this 80, they can win 10 consecutively. In other words, 10, their previous 10 trades were a win, all of them. So they actually tend to develop overconfidence. They feel like, oh, we have discovered the market. Oh, now we are the best. Okay. Why? Because they won 10 consecutively, whereas there is still room for 20. So they tend to over leverage. Maybe their 11th position, they over leverage, or they take very crazy lot sizes and risk roughly 80% of their account. Okay. All these 10 months, maybe they have been like taking what they take on a daily basis. Okay. Risking what they risk on a daily basis. Okay. However, because they won 10 consecutively and now they're overconfident, what happens is they start actually over leveraging, risking more. Sometimes they risk 80% of their account just to find that, okay, the 11 trade falls in this category, the losing category. It wipes them. Now they are left with 20% of the account. They are gonna neglect everything and try to revenge to make their 80 back, which is close to impossible. Why now? Why? Because now they are no longer following. So one thing, as I was explaining, okay, the biggest problem with people who have high win rates that I've seen is that sometimes they win 5, they lose, actually now this is losses, they lose 5 trades consecutively, which means their 5 previous trades were losses. Losses. Okay, were losses. Yes, they have a system that has a win rate of 80%. However, because they lost 5 consecutively, which is part of the industry. Why? Because there is random distribution between wins and losses. That's part of the business. That's gonna happen every now and then. Then they say, this system is garbage. They go to the internet or they buy courses. Now they want to learn something new because they think what they have is not working. This is the major problem that is happening every day. Okay, losing consecutively doesn't mean your system is bad. Winning consecutively doesn't mean your system is bulletproof. Okay, these are some of the emotional things that these guys have gone through proper training to understand and to master. Okay, when these guys approach the markets, they have a sound mind. They know what could happen. They know that they don't know the outcome. Okay, now those who sell what is it, signals. How can you buy a signal when there is random distribution between wins and losses? Nobody knows the outcomes because the market is controlled by a variety of factors or variables that we can't control. Okay, our rules makes it easy for our win rate to be consistent. However, there are variables we can't control. Hence, there is room for this 20 losses for a system that has a win rate of 80%. Okay, so I'm not saying don't go and buy signals, but I'm telling you, you don't know the outcomes. The signals you just bought, and you feeling overconfident because you bought them from somebody who is described as the best in the country or the best in the world or whoever it is. Okay, you trust the person 100%. So you bought signals. Yes, maybe that person is indeed a good trader and they have maybe a system of 80 or 80 is to of 80% win rate. You don't know that the signal you just bought is gonna fall in this category or in this category. And because there is random distribution, why is there random distribution? Because there are variables we can't control. Why is a win rate consistent? Because we have rules we follow. Okay, these rules makes our win rate consistent when they are combined with variables we can't control. Okay, This is the most important thing. Okay, this is the most important thing. If you want to treat this as a business, okay, as a business, the first step is to get your emotions at the right place. Okay, go through emotional preparation before going to the charts. If you are still new, if you have been on the charts, be emotionally ready. Okay, I have a playlist called Start Here. We have went through a couple of points on emotions, which is the most important part. Okay, however, this is the most important thing. Have a playbook that you personally understands, and it is made up of your A plus setups. It doesn't matter if somebody shows you their setups every day. Okay, if you don't make those setups your own, if you don't understand them, if they don't work for you, don't put them in your playbook. Don't compare yourself with somebody else. Okay, and there are many setups. You don't need many setups. One setup is fine as long as you understand it, master it. Okay, know whenever it has presented very well, and do not violate your setups. Let me show you something quite quick right now. I think let me show you something. Okay, my favorite setups, or my A plus setups, are day 2 continuations. It doesn't matter if it's going up or if it's going down. Day 2 continuations, provided the setup well. In my previous video, I explained some things like, okay, things to look at, the checklist you should have before opening a trade. We explained that in our previous video. You can just go and watch it. Okay, so my favorite is day 2 and day 3 reversals. Okay, those are my favorite, and I'll explain them in a moment. Okay, I want to show you something. Let's go to gold. Okay, let's go to gold. Let me just I just want to clear everything up, because yesterday something fascinating actually happened, and I was like, okay, fine. Okay, let me go to a 1 minute. I want to show you yesterday. Okay, not today. And you know, if I'm gonna post something during the day, I'm not gonna post any analysis, because I don't want my analysis to interfere with your analysis. Okay, well, fine. This was during a session. Oh, let me bring in the sessions. Let me bring in the sessions. Okay, give me a moment. I'm bringing in my favorite sessions. Okay, yeah, these are my sessions. Okay, so this is a 1 minute. This is on a 1 minute, and this happened yesterday. Okay, this happened yesterday, and I was actually looking at this yesterday. Okay, as you can see, it happened during the US session. Okay, this is yesterday. As you can see, we had something very, very fascinating. Let me go to a 15-minute chart first, because I want to show you this. Okay, and gold is just consolidating, and big moves are gonna come out of consolidation. You know that, right? They are cooking something, and I'm not gonna say anything about the directions, because we don't know until our setups are presented. Maybe if they give a first green day, then we will know what to expect tomorrow. Okay, so those are the things. Okay, if they give a first green day, means tomorrow will be day 2. My A plus are day 2s. Okay, I'm not talking about the weekly template right now. Okay, I'm actually talking about the day 3 days. Okay, so let me show you what happened yesterday. Okay, we have the low. As you can see, this is the low, and then they made another low. Okay, another low yesterday. Okay, which was closed later on. So I came to the charts. Let me show you something. They made another low. Okay, this is another low, and please bear in mind how they are closing the previous lows. Okay, when they made this low, they actually closed these guys, okay, over here. Okay, and eventually when they actually made this low, they closed these guys over here. Okay, And later, when they made this low, they closed this guys over here. Okay, fine. We're not talking about that. Okay, I want to show you something that really happened, and I want to be quick about it because time is important. Okay, fine. Where is that? Okay, here we are. Okay, so as you can see, we have three lows: the low of the previous day, and the low of early session. Okay, they are not taking out these lows. What do? They come and break, and then after that, what did they do? They were just hitting this level like crazy, perfectly hitting this level. What happens? Those who learn support and resistance start believing that, oh yeah, okay, this is a very good support. Okay, this is a very good support. And what I did yesterday is actually I set an alert for when they stop hunt these people here. Why? Because one thing I realized is, okay, they didn't take these guys out. They don't want to take them out. Okay, this is a trap. They didn't take these ones out. Okay, fine. They don't want to take them out. Okay, and now we have these guys. They are not taking these guys out. Okay, fine. This is a trap. It means they're sending everybody down, but not taking those who are already trapped. Okay, fine. Then I formulated a thesis, which is not in my playbook. It's not in my plan anyway. And then what? After I saw this, that they've been hitting here, I told myself that, okay, now they think everybody is a fool. Okay, they think people are fools. Okay, and I just kept quiet. I set an alert. When they break this level, I wanted to be alerted. And yes, as they broke here, this is the last hour of the session. They broke here. They gave a small engulf. Remember, engulf, it doesn't matter the size, followed by a bigger engulf. Okay, and one thing I knew was there was a lot of liquidity along the way. There were these guys. These guys were not closed. People who shorted here, they were not closed. I also knew people who shorted here, yes, they might have been closed by spreads, but there are some with bigger stops who were actually in profit. People who shorted here, these guys are not taken out. Okay, and then there are people who shorted here. These guys still are in profit. Okay, and remember, one thing the market does pretty well is to hunt for liquidity. Some call it order flow. Some say order block. It's fine. It's one and the same thing as long as you understand it. Okay, and then I knew that, okay, fine, I can get 50 pips because I measured and it gave me around 60 pips. I took it from here. It gave me around 60. Yes, it gave me around 60 pips, and I was so tempted to take this. Why? Because they were hitting this and they were gathering orders. Hey, people were buying like crazy here. People were buying like crazy. Why? Because support and resistance. People believe in support and resistance, trend lines and all sort of stuff. Okay, hence why 90% are losing, because people are looking for the easiest things. Okay, it's not supposed to be easy. It's supposed to be easy for you after getting your A+ setup. Okay, once you have mastered it, which is hard. Mastering a setup is very hard. There is a lot that actually builds up into a setup, so it's very hard. It takes time. It takes actually a lot of effort, okay, to understand the setup and to make it your A+ setup. It takes a lot. Okay, it's not easy, but once you understand it and you've mastered it, everything becomes easy. All you need is to become an algorithm. Okay, now let's see. I was tempted, actually, honestly, to open a position here or at least here. I knew that I will come out with at least 50 pips. Okay, because yesterday, okay, let me show you. I did believe honestly that, oh no, this was gonna happen. Hence I set an alert. I was highly convinced, because I can't say that I was sure. We are never sure. Okay, random distribution. The markets are uncertain. Nobody is sure. Nobody knows. Okay, fine. Even the best don't know. Okay, so I actually was convinced that they will break. They did. My alarm rang, and then I just looked at it. I was so convinced, but I had to cancel when I was placing an order. Why? Because that was not in my playbook. It was not in my plan. Had I taken it, yes, the results would have been good. And remember, a win means nothing. For you to have a winning trade, it doesn't even need skills or any knowledge. Somebody could have came here and guessed, oh, now they've pinned, oh, okay, I'm buying. They could have been in a win. The hardest part now is maintaining consistency. Okay, maintaining consistency. Okay, this is why most people will start with demos. They think they are winning. Okay, they come to the real market, they win 1 2 3 blown. Okay, fine, 1 2 3 blown. Do you know why most brokers actually take the opposite position whenever you open? It's because brokers have came to realize that 90% are losing, hence they no longer need to actually place the order on the real market. When you open an order, some brokers take the opposite direction. Why? The stats have proven that retail guys are losing. Okay, and one thing brokers know is, okay, fine, they give you roughly 3 months. They don't care. They give you 3 months. When you open when you open an account and deposit funds into it, it doesn't matter how much you deposit $1,000. They give you 3 months. Okay, they give you, actually, let me explain how it happens. Okay, because I wanted to give you a short version of it, but let me give you what happens. First of all, okay, when you open an account with a broker, most likely somebody will call you and tell you they are your manager. Okay, what does that mean? It means now you have a person who is actually monitoring you. Okay, and since you are new, they will take maybe a week or more to monitor you. Okay, or even take a month to monitor you. He's your manager. He tells you, call me if you need anything, call me if you need answers to whatever question you have. You think, oh, this broker is good, hey, it gave me a manager, and so on, so and so. No, it's not good. That person is gonna monitor you. Okay, when they monitor you, they're gonna know your performance. That's what they need to know. You are new to them. They need to know. They have categories. They have categories of best guys. Okay, they know it's highly dangerous to actually take an opposite direction of a consistent guy. Okay, so what they do is they monitor you maybe for a month or even 2 months. Okay, and they look at your performance. Is this person consistent? Okay, is this person like, is he risking the same amount per trade he opens? Or else someday he comes and says, okay, I'm risking 20%. He wins 2 and say, oh, I'm risking 50%. That's what they are looking at. Does this guy know what he's doing? Okay, when they figure out that this guy is good, what they're gonna do, they're gonna put you in a different category. If they realize that this guy is bad, they're gonna put you in a different category as well. And then if you are good, whenever you place a trade, what they're gonna do, I don't know if it's legal, but it's happening. Whenever you open a position, they add more of their funds and place it on the real market while you were good. They want to leverage your skill. Okay, if you are bad, they know, okay, 3 months he will blow his account, we don't care. So they don't care if you win 1 2 3, they don't care how much you make. Okay, they know that eventually stats will always come to save them. 90% are losing, and they've seen that you are losing. Okay, and then they know that 3 months your account will be gone. It doesn't matter how much you've deposited, $20,000, it doesn't matter. They know that within 3 months your account will be gone. Okay, so those are the most important things. Hence I knew that, okay, fine, if I open this position, it's not in my plan. Okay, it's not in my playbook. I don't have a setup for this, but I see it, I can scalp it, fine. But if I win it, good. Wins mean nothing. That means if I break one rule today, tomorrow I'm gonna break another rule, and now I'm opening a door towards my weakness. Why? Because this is not my strength. This is not my A+ setup. Okay, that means it's gonna be part of my weakness. Tomorrow I'm gonna see another setup like this. I haven't back tested. I am now using conviction. Okay, what will happen? I'm gonna break one rule, tomorrow I break another rule, the following day I break another rule, another rule, another rule, another rule, and then before I know it, Titanic happens. The ship sinks. Why? Because now you are taking things out of your plan. So it doesn't matter how good it has presented. A win means nothing. Okay, so this is why I didn't take it, and eventually it went beyond 50. You see, beyond 60. It actually went 70 pips. Okay, and I wanted to put my take profit over here. Okay, so this could have been a very good trade, but out of my plan, which makes it a bad win. Okay, so there are good wins, bad wins, good losses, bad losses. A bad loss is a loss of something that is not in your plan. You took it, yes, but it's not in your plan. You lost it. That's a bad loss. When you are journaling, you should have such categories: bad losses. Okay, bad losses. You'll see that in the long term, bad losses are really bad. Okay, they are really bad. You can't account for them. Okay, you can't account for them. Hence why Bill Lipschutz on his interview actually said, if I'm in a position and price action changes and fundamentals also change, but I'm in a position and prices are going in my direction, he said he closes that position. Why? Because at that moment something is happening that he doesn't understand. Okay, and you don't want to be in something you don't understand. Who is this guy? I'll tell you his name. Actually, I posted that. Something he said in the community. It's Jim Rogers. Jim Rogers says over and over again. He says, if you don't understand, if you don't know what to do, do nothing. Okay. So don't violate your plan. I'm only showing this because I was highly tempted. It could have been a good win. Okay, but it is not sustainable. Remember, to win, you don't need any skill. So I could have won without even knowing what I was doing, but in the long term, I was going to open and take things that are not in my plan. Sorry for spending so much time explaining, but this is important. Only take your A+ setups. It's important, okay? My A+ setups are day 2 continuations. Once the market has been going up, they give a peak and close as a red day. I want to be there on this day 2. But in my previous video, let me just repeat this quite quick, because I don't know, some of you won't even watch my previous video. Let me just want to make this fast. Okay, where's my pen? I can't see my pen. Okay, here's my pen. I told you the first thing to look for, or the first thing I personally look for, is signal day. Okay, signal day. If I say day 2 is my favorite and day 3, that means my signal day is for a day 3 setup. My signal day is day 2. For a day 2 setup, my signal day is first red day or first green day. And then after I have a signal day, say for instance I have a first red day, then the following thing I'm gonna look at is the setup on tomorrow. Okay, because if I get a first red day today, it's actually giving an opportunity for tomorrow. So tomorrow, if it's a first red day, that means prices have been going up for a number of days, could be 3, 2. Okay, and then they trap, give a peak, and then close low. Okay, so if I get something like this, then the following day, okay fine, this is the low. Okay, the following day I want to see a pump. They pump it up to dump it to day 2. This is my setup. Okay, maybe they set up through 3 sessions. Okay, that's what I'm looking for. Okay, and then after setup, I want to see a pattern, and I couple this with structure, market structure. Let me say market structure. Okay, my handwriting, I told you I'm using my mouse. So in other words, if they're now say, okay, they went down. Okay, let me do this here. Say maybe they went they were going up, as we have been saying, going up for a number of days, and then they give a first red day, they close like here, and then now I need to see a pump, and on a pump at the right time, I want to see something like maybe a double top, head and shoulder, whatsoever it is. Okay, triangle, whatever it is, and then I couple it with market structure, which means I want to see a pattern and I want to see a break in structure. I want to see them moving away from the pattern. I say this in every video I produce. And now there is a break of structure. I just put break of structure here. This is market structure. Now they are moving to the downside, and one thing I'm waiting for is a last push to the top. Okay, and I want to see them failing and giving a now. Okay, I didn't mention this in my previous video, but I always mention this. Now I need an engulf. So what I mean is candlestick pattern, candlestick. I want to see candlestick confirming, hence I need an engulf in the direction of the newly established trend for me to take it down. Okay, I need candlestick. That's when lastly I will have a point. If everything has been met, I will have an entry, and then I will have a stop loss, and then we'll have a take profit. Some people don't believe in stop losses, but I believe that the yen showed you, I think it was the past 2 days, where it went 250 pips in just 1 minute. Yeah, we all saw that, right? So you need a stop loss. Okay, so this is my approach for a day 2, and once I get a day 3, depending on day 3 I have 2 options. Okay, day 3, say maybe this one closes here, day 3 I have 2 options. If maybe it trades down and it set up well for reversal, fine. If it consolidates, then I know the next day they will give me a correction. Okay, most of the time. However, the setup must be there. If it's not there, then there is nothing. Okay, so this is my approach, this is my checklist, and I believe, yeah, this video is too long, but I believe you find value. Okay, I believe you find value, and always remember that you are against these guys. You are against these guys. These are the people you are against. Have a playbook. If you don't understand how or the importance of playbook, you can read a book by Mike Balafore. It's called Playbook. Okay, and again, if you don't understand about the A plus setup, you can just go read a book by the same author, Mike Balafore, who actually owns a hedge fund, and he has a trading floor with experienced guys that you are also trading against. So his book is called One Good Trade. So he has 2 books, and those books are amazing. Okay, so these are the things these people have learned and they have developed, and they are actually logarithms. What you see now here is people who have actually became logarithms. They have A plus setups, and they take those A plus. It doesn't matter if today the day was red or green. I see people complaining about red days. It doesn't matter. Red days, I mean like losses. It doesn't matter. It doesn't matter. Losses means nothing. As long as your system is good with a defined win rate, it doesn't matter. It doesn't have to be 70. It doesn't even have to be 60. Okay, it could just be 50 or roughly 40% win rate. This is enough for a good career. Okay, Peter Brandt, one of the best, he has 30% win rate. So this is just crazy. Okay, if you get an A plus setup, that will give you a win rate of 80%. Geez, that will be good. But remember, even if you have a win rate of 80%, one thing that's still important is build your size slowly. Okay, say for instance, if you started by risking $1 to make $5, okay, you can increase your lot size over time. Say maybe you say, okay, fine, in every 3 months, after 3 months I'm gonna increase. Now I still the risk reward ratio still is the same. You don't have to change it, it's not necessary. However, you can change the lot size. Say for instance, you have been achieving this using 0.01, and then after 3 months, if you have been consistent, or after you have completed 100 trades, that's when you can say, okay, fine, now I'm increasing it to maybe 0.02 or 0.03. Why? Because now you are building experience. Remember, experience is important, and you can't buy experience. Okay, you need experience. Okay, you need to grow your way up. That's one thing I really love. Okay, grow your way up. I don't want quick things. I want to grow in something. Okay, because that is sustainable. Okay, quick things are not sustainable. Okay, so honestly, personally, I don't prefer quick things. Okay, I always try to stay away from quick things, because as quick as something come, it can go very quick. Okay, but if you grow into something, the experience you gain, it's amazing. This is why if you read It was reminiscence of stock. Is it reminiscence of stock? I think yes. I think that's the name of the book where they explain the life of Jesse. Jesse actually lost $100 million. Okay, he made it from scratch and lost it. He made it again and lost it, and he made it the third time. Okay, this is not luck. This is not luck. Okay, yes, he might have lost it due to overconfidence, which is the case. Okay, so this is not luck. This is not luck. You can't lose this amount and make it 3 times. That this only shows that with the right skill, this is a very good industry. Unfortunately, with the right, without the right skill, the right mindset, right psychology, then it's hard. Okay, he made it 3 times. That is crazy, right? So, and that's when after maybe another 100 trades, you can say, okay, now I'm increasing it by 0.05 to 0. I'm actually increasing it to 0.05, because this means if you were risking $1 with 0.02, now you are risking $2 to make 10. Okay, same risk reward. Maybe you are risking 10 pips to make 50 pips. Now the amounts changes. With 0.05, now it's like you are risking $5 to make $25. Okay, and you grow your way up to a point whereby we can take bigger lot sizes, because it's only the lot size that comes in handy. And as you increase slowly like this, then even the account is growing massively. It's all about compounding over time. So over time will give you one thing that you can't buy: experience. Okay, you can't cheat your way into experience. Okay, you can cheat your way into everything, but not into experience. Experience is priceless, and it takes time. And imagine if you grow like this to a point where you take 50 lots, okay, which is part of my goals, to be able to take 50 lots or 100 lots with the right experience. This will be amazing. Okay, this will be amazing, and that's the only way we can grow our way to the list of the best in the world. Okay, not Instagram marketers now. I'm talking about the best in the world. Okay, and that is the goal. Okay, so I know that this has actually been too long, and now I'm about to go back into the market, because it was during the window period. I don't want to be in the market after my session time. Immediately when my session ends, I want to close, and that's when I was able to actually record this. Okay, so you can comment, like, and subscribe, and you can share this with others. Okay, because remember, these 2 things are the most important: risk reward and win rate. Okay, and the most important thing is to have a plus setup described in your playbook, and take this every day like an algorithm. The hardest part is mastering this. The hardest part is mastering it. The hardest part is mastering it. But over time, once it's mastered, once you understand it more than any other thing, it can become an algorithm. And once this stage is reached, then everything is fine. Why? Because you get to a stage whereby you no longer care about a loss, and you no longer care about a win. It's not about this. And for retail guys, 90% are losing. Actually 95% are losing, and only 5% are making it. Okay, why? Because for them it's all about get a loss. They cry the whole day. They think they are not good, start judging themselves, start believing nonsense. And the moment you start interfering with your mind, then you tend to believe that you are not good. Maybe this is not your industry. Maybe you don't deserve this. Maybe you are just a failure. Maybe this, maybe that, maybe this, maybe that. Okay, it's so easy to go through those emotions if this is the main priority. Okay, losses and wins mean nothing, because if you have 5 wins in a row, you feel like, okay, now I'm the Elon Musk of the markets, now I'm the Jeff Bezos of the market, and you think you're good, and eventually become overconfident and over leverage, or expose more and more. And if it goes against you due to random distribution, then it's a problem, because remember, you can't control what other people are doing. What I mean is, okay, let me just show you in a minute. This is the last thing. Okay, say for instance, I say day 2, say the markets have been going up, and then they give a peak, and then they give a first red day. Okay, fine, this is the closing, and now on the following day, I get a setup, Asia, London, US, and then I get my pattern. Okay, I get my breakout of the pattern, and just as they are ready to go, remember, those moving the markets can see everything. They can see the orders above, they can see everything. They have the power to move the market, and for some other unknown reasons, maybe there's more capital up here, more than what they grabbed. What do you think they're gonna go with? Are they gonna go with less, or are they gonna come back and trigger this, close these guys here, hit all the stops and go? Say for instance, maybe they go up and hit all the stops, then go down. That means you became overconfident, or I became overconfident, because I have an A plus setup, but it didn't turn out the way I expected. Why? Because a number of guys decided to buy here, and those moving the market saw that this is amazing, we can't go without it, because their goal actually is to take from many and give it to few. So they saw that no, we can't go with everybody who's right here, we have to go and close them before we go. So that means I have lost. Everything was perfect, okay, but I lost. Why? Because now these are variables I can't control. I can control who opens a position, who closes. I don't even know why they opened or why they closed. Okay, so these are things we can't control, but they are highly possible. So because of this reason, you don't know the outcome, and the moment they reverse back, it doesn't matter if they're gonna come back down. This invalidates the whole setup. It is no longer what I anticipated, because now the pattern has been avoided. Everything now is just messed up. So this is a pass. Why? You just passed this one. Why? Because actually it's something different to what it was a moment before. Okay, so you only know this once you start building your playbook, and you start like putting more examples of good setups that have been actually that are now invalidated, and all sort of stuff. Okay, so don't be overconfident, and yeah, don't base your decision on this. This is not a priority. Loss or a win, it doesn't matter. Take whatever the results are and move on to the next one. It presents the same way tomorrow as this one. Don't say, hey, yesterday they went. No. Take it. You are now in a logarithm. Take it. This is why your win rate is maybe 70%. Okay, there's 30 trades to lose out of 100. Why? Because of possibilities of this. Okay, so just execute it as it is. It doesn't matter win or loss. Okay, and this actually takes time to understand. Okay, because I know most people are actually glued to the results. They mean nothing. I was very glued to the results. I lose, I feel like I'm bad. Nah, but I don't care, man. It's a loss, it's a win, I don't care. There's tomorrow, there's a win rate, I don't care. Okay, so win or loss, don't be emotional about it. And the only way not to be emotional about it is to have a risk reward ratio which is good, and use the proper lot. Okay, you have a $100 account, you actually risked you used the lot size of 0.2, meaning you risked $2 to make 10. Then you lost $2 out of $100. That's nothing. It's not even important. Okay, you don't care. Okay, you understand your win rate, you understand the most important thing, and that loss didn't really affect your account. But you risk $60 out of $100, you lose $60 in one trade. Believe me, you're gonna be frustrated, emotions all over the place, and you're not gonna make it back. Guaranteed, you're not gonna make it back. You're actually gonna try to revenge a market that has no emotions. Now you're gonna bring all your emotions in, you want to prove them wrong, or you want to prove the market wrong, they must go in your own direction. They're not gonna do that. That's not their job. Okay. They do what they do, no emotions, and they are not the reason you lost. Okay, you lost because there's random distribution between losses and wins. Okay, you should understand that every position you open could be a win or could be a loss, but the most important thing is the win rate. Okay, so don't attach results to this, and the only way to do that is to risk what you can afford to lose. You have $1,000 account, you risk $10. That's fine. You risk $10 to make 50. That's fine. You lost $10. It's fine. Tomorrow you lose another 10. It's still fine. You lose another 10. It's fine. You lose 50. You lose 5 in a row, which will actually amount to $50. That's nothing. From an $1,000 account, you win it the following day. You recovered your 50. You take another win. Now you are in $50 profit. It doesn't matter. Okay, so that's the most important thing. Don't overexpose your account. Okay, your capital. Protect the emotional capital, protect your financial capital. That's highly important. Okay, so only take risk you can afford. $100 account, risk $2. You don't care. Okay, you don't care. Okay, but the moment you start from $100 account, you risk $10. Now you have 10 trades, and you lose 10 today, lose 10 tomorrow, 10. You lose 5 in a row, you lost 50, you're left with 50. Now your emotions are going to be all over the place. But you risk $2, you lose 5 in a row. Okay, fine. You lost $10. You still have $90. Okay, so that's it, guys. That's it. I believe this will form a solid foundation. And yeah, I wish you all the best. And yeah, keep growing every day. And remember this point: keep reading books. Read books from the best guys in the world. Okay, not people who display a flashy life and then you think like, oh, they are trading 15 minutes and they're at the beach. Wow, this is a good career. No. That's not what you should focus on. Focus on these guys. You are against these guys. You must be at your A game. Am I saying you should be glued to the screen? No. You can trade 2 hours a day, but taking only your A+ setups. That way you will become part of the 5% that are highly profitable when it comes to retail, guys. Why? Because it's all about the setup. Okay, if it's not there, say for example, I don't have a signal day today, that means tomorrow I have nothing. Okay, so I don't care. Okay, tomorrow I'll get another signal day for the following day. It's fine. It's a free day. Remember, one thing we have as an advantage that professionals don't have is our time. Okay, flexibility. We can be there when we want to be there, and that's a good advantage, and we should actually enjoy it. Okay, so sorry, the video is too long. I know. If you stayed this far, thank you, and I wish you the best. Okay, you can just leave a subscription for the algorithm. The more people get exposure to reality and the truth, the better the world will become. Okay, and I'm only sharing this with you because this is what I wished many people shared with me when I was starting. The journey was a very bit difficult, but yeah, very bit difficult and costly, so you don't have to go through it. Now I know what I wish I knew by then, and I'm sharing it with everybody. So guys, I wish you all the best. Thank you.